I'm going to tell you how you can make money trading looking at gap fill by gap size. So I'll tell you what a gap fill is, I'll show you an example, and then I'll tell you what this report shows. So this is SPY. To the left of this vertical yellow line is Thursday, to the right is Friday. So you can see Thursday closed at 433.75. Friday opened at 435.20. And that means that there was a $1.45 gap up. That's just the difference between Friday's open and Thursday's close. So this is a gap up, and if there was a gap down and Friday opened below, that would just mean that it opened below this red line, which is Thursday's close. So it's based off of the close of the previous day. The gap fill is the close of the previous day. So you can see that Friday opened above and then went up and then came right back down, and then this right here is when the gap filled, when price touched the previous day's closing price. So there was a gap fill on this day. So what this report is saying is we're looking at SPY again, we're looking at the last 6 months, and we're looking at gaps by different gap size. So here you can select different gap sizes to look at, and you could see that in the last 6 months on SPY, 63% of gaps up, so this is where you can see gaps up here, this one, and then gaps down is this one. You can see that 63% of gaps up between $1 and $3 have filled, which means this day falls in this category. This one is above $1, so it would fall here between $1 and $3. This is $1.50. 63% of the time, price for this day should touch this red line. Now, this is very useful for your trading because it gives you a certain bias for the day. Now, obviously, as the gaps get bigger, the fill rate is less likely, but this gives you a very strong bias for the day where if there's a gap up and the stats are saying that 63% of gaps up get filled, you should have a bearish or short bias on the day. Now, it doesn't mean you just sell at the open or buy puts at the open. You find a short entry and you start to target this red line, which is the previous day's closing price. You set that as your target and it gives you a bias on the day. You don't just buy puts or start shorting as soon as it opens, hoping that it reaches this level. You find a good spot. Here, 436 would have been a great place to get short, but there's clear wicks above. This is an amazing place to get short, targeting this previous day's close, targeting the gap fill, because you can see that 63% of the time in the last 6 months, the gaps have filled. So that's exactly how you can use this report and this chart to make money trading.